The Hedgeless Horseman here. It's July 19th, 2022. In this video, I'll briefly talk about sentiment. Then we'll look at some gold CO2 numbers and other measurements of sentiment, as well as some stocks and some thoughts on what I think might be important right now. First off, this is the Bear Creek mining chart, which I've shown a bunch of times before, which is a sentiment indicator I use for the time being, at least. It's had a long history. It hasn't really changed much. With that said, I think they actually bought a mine quite recently, and they don't seem to be in the best financial position. So one could say that they might have even higher beta actually nowadays, because they're adding something which I assume comes with some kind of liabilities as well. I mean, project that's not in operation, etc., or it's not even developed, you can shelve that pretty easily without incurring a lot of costs. Anyway, it's like at times like this. Today we had the first half of the trading day. Gold was up, I think, up to around 1% plus. Silver was up around 2%, and both almost closed and unchanged as the markets started to take on water, going from green to red actually. So we're stuck in this, damned if you do, damned if you don't. Basically, quote, a bit of a rigged market, that when things look fine or risk on, then you see the broader markets rebounding and not too much buying pressure into gold, silver. But when they start to tank, it's all of a sudden risk off, and that takes down gold and silver as well. So again, it's pretty much a one-way street, which is something I guess you could expect at these around these extremes. Again, sentiment is so bad, and there's almost nobody that is greedy at all, so nobody really feels like chasing anything. So we get this kind of, and you can see it in a lot of juniors typically as well over the last several months, where you see some might pop and then they get sold off. So everybody's selling every rally, every uptick almost, and that's typically what happens, because everybody has forgotten that junior or mining stocks overall can actually go up as well, and that's of course a good sign in some way, that we are indeed at extreme negative sentiment. And what I've also noticed recently is that some juniors pop like 10-20% on almost no volume. They can of course go down as well on very little volume. But I think it goes to show, which I've said before, that when these downtrends that always feels like they're never ending, this was many years, this was around 2 years, this was the flash crash, this was the great financial crisis, and now we're also in a 2-year downtrend. I mean, it feels like the expectations for everybody's been taught basically by Mr. Market that this thing can only go down. So we're expecting, or people's expectations are that the trend will just keep on going, because you have not seen much in terms of evidence of it being, can possibly go the other way, except this actually was a nice little, I thought actually this would be the bottom in juniors, which it was not, but that still had Bear Creek mining pop 114% in, I don't know, from the bottom 1 to 3 weeks pretty much, 110%. So obviously, why I don't dare to try to time these extremes in terms of bottom picking. I mean, since we will go into a sentiment high sometime in the future, let's just for simplicity's sake that we'll retrace it to this level, and not truly a mania, but at least this. So from this level, that would be 300%. But if you try to time the market, let's say, and you got in maybe here, That's down to 86%. And of course, if you did try to bottom pick and you know, quote, waiting for the coast is to be clear, waiting for a bottoming sign, you want to see that the trend has changed, you know, all of that crap that everybody and their mother says, yet they, you know, come back 10 years later and they're still not beating the market really. So let's say you know, you chickened out here, you were waiting for a quote signs of a bottom or a trend change, etc. So you bought in here because this was very convincing, I think. And yeah, grats. We're even lower now. You would have been way better off just buying low and kept on buying low than like selling low, buying higher, and then, you know, take another loss. But that's you know, the volatility is how you typically people grind themselves to oblivion. Because one thing I would point out, like, why do I like the junior sector and the mining sector overall? It's because there's so much psychology in it. So in poker, for example, I mean, typically it wasn't the smartest guy who won the most or the dumbest guy who lost the most, let's say. Typically it's the one that's most emotional. So where you have emotions involved, there are way more, the more emotions involved, more opportunity for anyone who can detach from emotion and stay rational and have a firm grasp of the obvious, yada yada yada. So a volatile sector will bring a lot of emotions, but it obviously brings a lot of opportunity because these swings are, I mean, if you catch one of these, that's like, you know, several 100%, typically in a very short period of time. So there's obviously plenty of opportunity. I mean, anyone can look back at this, which I've shown, and like immediately spot when you should be buying. Immediately. I mean, it should be pretty obvious. That's like, if it ever reaches this level, or if it gets close to this level, it's like you're gonna be making money every time within, let's say, 1 year or 2 years, or less than a year here. But again, these bottoms are extremely frustrating. They are grinding. It feels like it's never gonna change, never gonna change, never gonna change. So every additional down day is like exponentially more painful, I would say. I mean, a down day up here or a down week up here is like, yeah, okay, no big deal perhaps because you're maybe still sitting at a good profit. Now, every additional day or week is like getting exponentially more painful because if it goes down, you have a larger paper loss and for a longer period of time where you looked quote stupid. So this is what we should expect. Every additional day this doesn't turn, we're getting obviously closer to the bottom because more and more people who are actually willing to sell at these levels are gonna sell. And that's also why we're seeing this dried up liquidity, I think. Even during this flash crash last week, silver fell 6%. You didn't really see the juniors crash, you know, 20%. I certainly didn't see many do that. Some actually close to green. So that kind of tells you that there's not many people left that are panicking. I mean, it's gonna take them a lot, I guess. I mean, emotions must spike way higher than even 6% minus in silver one day for people to actually sell ownership in the assets they own right now, because I guess most people that are left really understand that, Jesus, I am stealing an enormous amount of value. You're not paying sunk costs a lot of the times in these juniors. Some are almost for free, almost get every project for free. Some actually pretty much get all the projects for free. So it makes absolutely no sense from a rational standpoint. So at the end there will obviously, I mean, there is no weak hand or momentum trader. There's no 95% person really that is buying right now. But what are you seeing right now and for the last, you know, several months? Insiders. I don't remember seeing this much insider buying since I started out in 2015-16. And one would assume that they indeed have a firm grasp of what they own. and how hard it is to, put together what success they might have and how much sunk costs are spent, etc. But be prepared that every additional day is gonna feel worse and worse of this downtrend, and it's gonna feel like this can never turn. But like you have seen every other extreme, here it didn't even go down to this level, but when it did, sure, this was the biggest bear market. That downtrend actually persisted for 4 or 5 months from where we are. So that's like, yes, that is a possibility, of course. Even though the outlook, the miners are way more undervalued now than they were here. So they have I don't think they really should be trading down here back then, but now there's a lot of cashed up juniors, etc. So this is, in my opinion, way better opportunity than this. So it's like, if you can't see that, I don't know how anyone would beat the market. It's like the macro tailwinds for gold look superb. Everything is turning to crap on a daily basis, basically. The demand supply picture looks increasingly favorable. We're simple. You've seen, you see all the time now almost. It's like something happening. Some mine shuts down because of cost inflation, or some mine gets their permits, recanted or removed or whatever. So it's like the one thing I would like point out is, as this ESG climate thing, whatever you want to call it, and no mines in my backyard kind of mentality, as that gets worse and worse, meaning less and less mines are actually able to be put into production. Think about the value of any deposit or even operating mine. It's quote bad enough that we are not finding enough gold deposits or silver, whatever, copper, nickel, to substitute what we're pulling out of the ground every year. Newmont Mining is expected to produce around 8 million ounces per year over the next 10 years. That's one Great Bear deposit that's mined and gone per year. We're not finding that many Great Bear deposits, and certainly not putting one into production every year. Combined, sure, you can put a lot of small mines together, but the small mines now are actually hurting. So the supply side is looking increasingly favorable. And like Thomas Kaplan, the Electrum Group billionaire, said, he expects there to be a bubble within a bubble in the good jurisdictions, in the gold bubble or mining bubble, coming gold mining bubble. So think about that. We're trying to front run as much sentiment as we can. This is obviously a huge delta swing in sentiment when you go from almost completely empty in the sentiment glass to full, and over that would be spilling over pretty much. So this move alone is gonna bring several 100% in juniors broadly. But what if some or many are in jurisdictions where it gets increasingly obvious that they will not be able to put a mine into production in that jurisdiction anytime soon? The value of those will of course drop, and less supply is going to come on. But what happens with the operating mines, or the mines that are, or the deposits that are in jurisdictions where you can actually build a mine? They will of course go the opposite direction. They will increase. Okay, red wasn't good. They will of course increase in value as fewer and fewer jurisdictions are mining friendly. So just think about it. Let's say we would need, 5 big discoveries per 2 years or whatever to have supply meet demand long term. What if only one, first of all, we're not even finding that, but even the ones that are found, what if, like, 30% of them could even get into production because the 70% of the jurisdictions are too bad and getting even worse? I mean, imagine the value when these miners who are cashed up right now, larger miners, need to get stuff into production because they are eating up their future every year. Newmont is mining 8 million ounces a year that it will need to replace just to stay flat in terms of production. I can only imagine what what valuations we might see in the best jurisdictions as this demand supply gets worse and the world overall gets worse. Gold gets rocking, silver gets rocking, etc. So I think some juniors will reach incredible highs, let's say. And from that demand supply perspective, it's better now than it was going into the 2011 top. On that note, we got a news release out today from G Mining Ventures, which is, I think they're Lundin backed, if I'm not mistaken. Where's the shareholder register? What the hell? What the? Am I missing something? Anyway, I'm pretty sure. Well, Eldorado Gold is obviously a shareholder. The Gignac family management board 14%. I'm pretty sure that the Lundin family and even Sprott and Rosbiri is here. Okay, Lundin Group, Sprott, and Gignac family. Okay, so you have a bunch of smart money in this junior, which is now becoming a developer because they just announced a 485 million US dollar financing package. 481 million US for a mine in Brazil, which happens to be very close to bear with me, which happens to be right next door to Cabral's Cuiú Cuiú project. And Equinox Gold, the Rosbiri helmed company, is developing its fourth mine in Brazil. So just think about that. Think about the valuations out there, how little cash there is for almost any other project really. And Brazil, which obviously you can go mining in because they've reached so far, G Mining Ventures, in quite a short period of time that they actually are ready to finance the project. And Equinox Gold is developing its fourth operating mine in Brazil. So obviously right now this is a very mining friendly country, at least some states, which results in them being able to raise 481 million US. And I wouldn't really say that it's like yeah, it has some okay hits, well, more than okay hits, I guess, but like this is not a tier 1 project. Maybe it's tier 2, tier 3, not 100% sure how you would deem that, but this is going to actually be quite a large mine. But it's nothing out of the ordinary. This is no Great Bear type deposit. But still they're able to literally raise 481 million US. I mean, again, think about that. In Brazil, they can raise that amount of money. Why? Because they can actually put a mine into production here, which they're showing that they can since they're financing and gonna build it. And Cabral is right next door, so obviously, I mean, they're probably thinking that longer term picture, they're gonna buy up Cabral as well, and then they're gonna, I don't know, double the the resource base, etc. So I think Cabral is benefits an incredible amount from this news release. But anyway, important thing is like the juniors with projects where you can actually build a mine, I think are gonna go up way more in the future than the juniors in the jurisdictions that where even if they find a deposit, everybody knows that they will never be able to permit or build a mine there. And obviously the mining companies will know that as well. So just think about that. I mean, again, what is the good thing about these sentiment laws? Everything is on sale. Everything, literally everything is on sale. So you can pick and choose till your heart's content, basically. And you can sell a lot of crappy stuff if you own it. You can buy like the best in the business type of things in the best jurisdictions, where the true merits of those companies are just gonna, or the merits of the jurisdictions for the juniors that are in the good jurisdiction, that's just gonna become more and more important as time goes by, I think. The more negative headlines and the more, socialization, the more nationalization, etc. in some jurisdictions, everybody's gonna flee there, free from those places, and everybody's gonna be forced to pile into the few places where you can actually build a mine. And as time passes, we will need, the need for new mines is just gonna go up every year. So I see that as a perfect storm. If you actually can find a good project and it happens to be one of the better jurisdictions, I think that the value of that is not shown yet, but it's gonna really show in the future. Demand supply is very much in our favor. Time is on our favor. Not many mines being put into production, but we're consuming or taking up more silver and gold every year. Some other headlines: managed money futures only. Trend following commodity trading investors are net short gold for the first time since gold was $1,300 immediately before the rally to $2,000 began. So basically what he's saying that the momentum crowd is as short as it was actually, I guess also maybe in the fall of 18 and spring of 19. Anyway, you can see these were obviously good buying opportunities in hindsight, and obviously were much higher than $1,300. More, let's say, bottoming signs or contrarian signs. From Samson Lee, China CCTV on gold purchasing activities heating up in traditionally quiet June, July, according to SGE. A withdrawal from Walt increased by 37 tons month over month in June and increased 7 tons year over year. Physical demand in China appears to be very hot, despite what you're seeing at the COMEX paper prices. And just look at some charts. SK Mining the RSI looks incredibly coiled. So this is forced basically to break in the not too distant future. And it's either gonna break up or down. I would guess that it's gonna break up. It should break up, given what, how the fundamentals have developed, but you never know. If we get a market crash, it's probably gonna be down, like everything else. But I don't see any reason for it except a liquidity event, and that's the kind of risk reward I like, because liquidity events don't last forever. And if the, intrinsic value is up around here, it's just gonna take, a longer time, etc. But you're not. It's a paper loss in that case, but it's not a permanent loss unless you sell the lows. Goliath Resources is looking kind of perky. Obviously some kind of trend line here, which is, I actually think we closed at around 97 cents. So depending on how you want to draw this trend line, maybe we were at it or actually crossed above it. I would say that this looks like it already started a uptrend here, even though it met resistance at this line. So I think pressures to the upside, which would be expected given the valuation and what they have been reporting, in terms of visuals from the core. Silver optics, which is basically a sentiment. I think it's based on option spreads or whatever. Obviously, it's suggesting that the sentiment in silver is extremely negative. Same level as here pretty much. This was actually lower. But typically when you have these low, I mean, at least you get a pretty good rally after everyone. So these are like extreme. So if you're purely a contrarian, I mean, this is like, I guess, the most contrarian buy since 2019. Certainly not a bad thing. Again, what typically happens that when almost everybody is bearish. I mean, there's no one left to sell really. Gold optics, kind of a similar situation. I mean, in the actual big bear market, it ticked around here quite a bit, but since the bottom in 2015-16, we've already only seen these levels like during 2 periods. Basically here and this period. So obviously a contrarian sign as well, that it looks like everybody and their mother is already sold out. Gold hedgers position, I think this is the COT report. I don't know much to say about this except that this was like this was the, I guess, highest peak since the bottom of 2015-16, and that was like the pretty big bottom before a really good run. And I don't know what this, I guess that's like Bollinger Bands or something. But it appears that we are kind of, it's very bombed out. And I've actually been starting to look at some, I mean, I can't help myself. It's like everything is cheap. I can just, look at a few names I haven't really tracked that much, and I see, I mean, look at this, cascade of selling. That's like, I don't know how many red candles in a row. It's like here. Or even, pretty much along those lines. And you can see, I mean, this is a complete washout. I think that Victoria Gold is actually, pulls out pretty good cash flow, and it's not a, high cost producer or anything like that. I mean, it appears that this basically went back and filled this gap. And don't ask me why it's trading like this. I mean, I'm assuming it's not far off from sunk costs right now, and it's got 3.6 million ounces or something like that, and is currently profitable. So how you can warrant this valuation, I don't know. But like I try to point out, I mean, this is not a functioning market maker or value reflector right now. Mr. Market is totally depressed, and this was, obviously what typically traders are aiming for, and they don't give two craps about the fundamentals. It's just easy to sell right now because, stop losses get triggered and people get scared. So it's like, these are ridiculous prices. I'm even tempted to buy this, even though that's not really my cup of tea, because I want higher growth. But it's like almost everything is starting to look good right now. And you can see on the RSI here, it's like it's never been this oversold on the daily since at least 2018. Like first half of, or after second half of 2018. And you can look at like pretty much every like cascade sell has led to a nice ramp afterwards. So again, I wouldn't want to sell this. I'm actually inclined to buy. Equinox Gold, that also is starting to look really cheap. It's not really a low-cost producer, but they have, I think, 6 mines up and running, have a market cap of 1.5 billion, and they, again, 6 mines, and they're ramping up production across the board, putting new, at least that mine in Brazil, into production. So I think there's some pretty good beta and growth in this one actually, and like Ross Beta I think is the largest shareholder or second largest or something like that. So I don't think Equinox Gold will go bankrupt anytime soon, even if margins are squeezed a bit, because he has some connections. And on the RSI here, it's like, yeah, it looks like selling is running out of steam. I mean, it's just incredible. I mean, there's no way that Equinox is not selling for way less than the sunk cost to put 6 mines into production. The ones they have. It's like if they rebuilt everything with today's inflation, there's no way that comes in under 1.5 billion. Which is just crazy. So you could not, like in the same case, I think Victoria Gold, you could not duplicate what they have anytime soon for anywhere near the kind of money that the market cap of the companies. It just makes absolutely no real sense what we're seeing out there right now in this high inflation environment. But sure enough, I mean, a company's only value as all expected future returns, obviously. But still, it's like they have a growth profile, strong backing, pretty good position, I think, as well, and they have like 300 million in share stock value from what is it? Not Solaris, yeah, maybe Solaris. That copper junior with the Warintza project. So you get a lot of infrastructure, many mines, and many developing projects for 1.5 billion. Add the net debt to that. So it's like, yeah, I know Rosabetti, I think he bought quite a bit around, what was it, $8-9 or something. Anyway, yeah, it's just incredible the stuff you can buy at these lows. It's like this is gonna get rectified big time. I mean, when we reach the next sentiment high, at the last sentiment high, Equinox was up at $17-18, and I'm assuming the companies actually has more value today because they have advanced projects and acquired projects, etc. So if one would expect a simple, 3-4 bagger when we arrive at the next sentiment high, if they add some growth at the same time, since then maybe it goes up to, well, I don't know. But you get my point. It's like everything is basically going to bounce a lot as soon as sentiment changes. And this is just to illustrate, I mean, demand supply picture for pretty much any metal out there is just getting better and better and better because the world grows. You have the green wave. We're not finding enough metals to plug this, what we're pulling out of the ground. And still, during a downtrend, investor appetite goes down because everybody's looking at the trees. So this is like, I mean, it's just ridiculous how good of an opportunity this is, I think, right now. And, the Chinese saying crisis and opportunity are the same word, basically. It's like if you want to have multi-baggers, the best shot at that is to just buy when everything is extremely low, because it's very hard to get a multi-bagger if you buy here, at least in the next 2 years. From here, I think it's going to be super or relatively easy to get a multi-bagger if you hold it for, a diversified portfolio for 2 years. It's going to be hard. I mean, you can see how long time, these juniors tend to stay at these extreme sentiment lows. And that's not a long time. So this could, and we've looked at the, COT reports or COT reports and other sentiment indicators for gold, silver. It's like everything is screaming that there's going to be some kind of bottom closing in because everything is bombed out. Everybody has pretty much sold already. Miners, gold, silver. And in the meantime, the demand supply picture hasn't changed. It's just getting better. And the world is getting worse. So it's like, yeah, this is, in my opinion, this is the layup of a generation. And hopefully we will be mostly in juniors where you can actually build a project and it doesn't get nationalized, etc. So you may may get, some 10 to 20 baggers that make up for the ones that don't work out. Consider me biased if I talked about any company. I always assume I own it, or am sponsored by it. So always do your own due diligence. I don't share your profits or your losses. This is not investing advice. Only invest money you can afford to lose, or at least won't be needing in like the next 6 months, in my opinion. Thanks for listening. Hit the like if you like these videos. Thanks.